Hello, have you just started your trading journey, or have you been trading and have not found profitability yet? Maybe you're blowing accounts, blowing your own personal capital. In this video, I'm going to share my key points that I believe can help you get to profitability and, most importantly, stop losing money. Hi, my name's Doug. I've been trading for 12 years. I've gone through the roller coaster of the trading journey, highs, lows, making money, losing money, trying to find a path to profitability. And there's a few tips in this video that I think are truly going to help any trader, but specifically if you're starting out, there's some key things I really wish I knew when I first got started. Point number one, there is no holy grail in trading. I don't know how to stress this any further. I would spend so much time on YouTube scouring anything I could find on the holy grail strategy, constantly trying to get a really high win rate or so consistent that it's not even real. I think sometimes in trading, we can be seeking a paycheck that comes in every week or every day trading the same amount, consistent. And the reality is that's just not trading. Trading is a game or business of uncertainty. There's fear involved, and there's just the market is just not a continuous, steady pattern, if you will, and predictable. So that'd be one thing I say. Point one, there's no holy grail. And leading me on to point two, you need to just discover and pick an edge. So this would be also the strategy you're going to use. These are all the same terminology, but simply put, trading is buying and selling. You're, in super simple terms, just clicking a button. But clearly, there has to be some, or a business case on how you're going to click those buttons. When are you going to buy and sell? What are you going to buy and sell? So my advice for you is to find or choose a time when you know you can trade. For example, if you are working a 9 to 5, okay, so I'm in Vancouver, BC. So the market opens for me at 6:30 a.m. I had to self-discover over time that a strategy that requires me to be there all throughout the day, or a strategy that's presenting a signal 3 hours into the open, that's not going to work for my lifestyle. I'm working another job, a full-time job. I got a wife and kids, and I got a full busy life happening. I had to self-discover that the best strategy for me is going to be something at the open. So something where I can show up, look for my signal, place my signal, and move on with the day. That is a strategy that's going to work for me. So if you see a guy teaching on YouTube as you're trying to discover what strategy am I going to use, think about primarily when can you actually trade? And I mean consistently 5 days a week or whatever you want, but the market's open 5 days a week generally. When is the best time for you to trade? So figure that out. And let's just say theoretically, the best time is at the open. Okay, great. You should be YouTubing essentially strategies I can trade at the open. I'll give you a basic one right now. And I can hear it right now, the haters saying that's not a strategy. Hey, look, I've done the back testing, and you could trade something as simple as when price on the 5-minute candle opens and closes outside of the first 5-minute range. I enter my trade in that direction. I put my stop under the candle or just under the last 5-minute candle that closed, and I set my profit for a 1-to-1. Great. Or you go, no, I want to set it for a 2R trade, which means you risk 100, make 200. Risk 1,000, make 2,000. And you could say, I'm going to set and forget. Or you're going to say, I'm going to move my stop loss every time a candle closes in my direction. I'll move it to the bottom of the last candle. Great. Or I'm going to move my stop loss to break even at 1R once the stock has moved up 1R to my target, which means halfway to the 2R target. So that's just an example. There are literally thousands of different strategies and variations of strategies, if you will, that you can choose. And I can truly say none of them are right or wrong. And I'm going to be as bold to say none of them are better than the other. And what I mean by that is If the strategy doesn't work for you, it's not a better strategy. Let me explain. If there's a strategy that is 80% win rate, which there's not really many out there, but if you have a strategy that's 80% win rate and it kicks butt compared to the strategy that is 60% win rate, let's say both of these are 1-to-1 R, okay? If you can't trade the 80% win rate strategy because it's while you're working, or because it takes waiting 6 to 8 hours on the screen for the perfect setup, or again, the signal never comes at the time you can actually trade, which if it's an hour at the open and you're only getting one trade a month because you can't actually get signals, well, that one trade a month is a worse strategy than if I get a signal every day at 60% win rate. You just do the math, right? 60% win rate, risking 1%, that's 4% a month. If you do the math, 20 trades a month, 1% risk, 20 times 60%. I don't have my calculator here, but I've done it in the past, 4%. Versus the guy who gets an 80% win rate, but only gets one trade a month, he makes 1%. If he risked one and lost 1%, like a 1-to-1. But actually, he wouldn't make 1% a month, because if he's only making 80% win rate and he got a signal once a month, that means 2-ish out of the 12 months, rough math, he'll be losing. Anyways, you see where I'm going with this. It's just a math and numbers game. That was long-winded to say, choose your edge and back test it. Okay, point number 2, as previously mentioned, you need to back test your edge. What does this mean? You need to open up TradingView. I can go into tons of detail on future videos on this, on how to do this, depending if you're literally just starting. You're going to open up TradingView, or there's a beautiful platform called FX Replay. And you are going to take your parameters of your strategy. Again, keep it freaking simple. You could, again, let's take that 5-minute opening range. I'm going to wait for price. You're going to draw a line, top and bottom of the 5-minute candle on, say, I'm trading the US 30 in Forex, okay? When price opens and closes outside, you are placing a bet and your stop loss is below it and your profit is 1-to-1. You're going to use the risk tool on TradingView and just simply track on an Excel sheet. I'm going to go into detail on this on future videos because I think it's very valuable on how I backtest. And you're simply going to just track it and see what would have happened in the month of, well, currently we're in January 2025. What would have happened so far in the month if I did that? I know the answer. You'd be up about 2%. 2%. Can you believe that? You'd be up 2% trading essentially, one would say, the dumbest strategy you could imagine. But that's the key, man. You got to keep it simple. So again, and then you start tracking it, go back December, November, however far your TradingView platform lets you go, and track it. And you have to be, this is the key, man. You need to be super real, raw, and authentic on your backtesting. There is no point if you find yourself going, oh, I wouldn't have taken that signal. No, like that's where all of a sudden you get into muddy waters and you track 100 trades on your backtesting and you don't fully trust it because you know you kind of fudged it a little bit. You said I would or wouldn't have taken certain trades based on the outcome that you've already seen. So that's the tricky part with backtesting, where the tool FX Replay can save you from that. You can't mess with that one. It's once you have seen what the outcome is, it's too late. You can't say, oh, now I'll place my bet on it. So to recap that, you have to backtest your edge. And again, I want to say there's one point on this I want to hit. Backtesting is the stronghold. It's the firm foundation that you can cling to and look at your data when you're trading, that I know this strategy that I've backtested for the last 2 months, 3 months, last year, whatever, however much data you've collected, it averaged a 60% win rate, 1-to-1 R. I know I will generate on average, that's the key, 4% a month. That could mean 10% 1 month and 2% 1 month. I don't have a calculator here. Whatever averages to 4% a month, okay? Maybe it's 8% and 2%. Maybe it's 4% 1 month, no percent the next month, like your break even, and 8% the next month. You're averaging 4% a month. Again, if I did my math right. So you get the idea, but you need backtesting to grab onto. In my early days of trading, Oh man, I would trade, and I've traded everything, man. Penny stocks, options, Forex, options spreads, options, simple calls and puts, you name it. It doesn't matter what it is. You need some form of back testing, and maybe it's a teacher providing you the back testing, and you have to trust, though, that it's legit, that we have tested this for the last 2 years, 10 trades a month, whatever it is, and it averages whatever. It can be anything. This win rate and this profit to loss ratio or risk to reward ratio, and you can hold on to that, because if you have a 60% win rate 1-to-1R, in 100 trades, you are going to lose 40 of those trades, roughly. It's never cookie cutter each month. You're going to lose 40 trades. So if you're losing, and you don't know what the sequence is, you could lose, I mean, it's not probable, but you could lose 10 trades in a row and then 30 winners in a row, or it could be, win 2, lose 4, win 6. You don't know. You don't know the sequence of how your edge is going to play out. And so the reason I'm saying that is, goodness, I just went through 4 losing trades in a row. Now it is January, and maybe I should have held off. But the point is, you get in your head on that. You're like, what am I doing wrong? Is the strategy broken? Dude, 4 trades in a row is part of the formula to lose throughout the year. Maybe a few times a year, 5 times a year. I don't know. You should lose 4 to 5 trades in a row as part of the system of a 60% win rate. So again, you need the data to cling on to. If you just go follow a guru or a teacher who just says, just trust me, just do it, and you don't know what, you're flying blind, there is a truly, in my personal belief, a 100% guarantee you're going to lose money. You don't want to do that. So you might make a couple winning trades and go, you see people on comments, oh, I made $1,000. Newsflash again, it doesn't mean anything. The question is, how much have you made over the last year or two? What is your total net gain in trading? It doesn't matter if you win or lose one trade. You can pull a slot machine and make money, but does that mean if you pull that slot machine 100 times, you're going to come out ahead? No. So again, a very key point to hang on to. Point number 3, this is massive. At some point, you need to forward test, or in other words, trade it live. I am a big fan. This is just from personal experience of my 12-year journey in trading. You need to trade live. Nobody wants to lose money. However, if all you do is backtest and collect data, it's kind of like going to school and studying for 4 years to be a carpenter, but never actually building a house or framing a house. Or studying, that's actually a good example, studying business for 5 years, but you've never been in the field of business. You've never actually managed people. You've never actually done sales in the real world. You've never actually, you know what I'm saying, had customer base. So you have to actually do the activity of trading to experience things you truly cannot in backtesting. For example, your first loss. The first time you see your signal, you trust your signal, you're confident, and it's a loss. And you're now experiencing emotions of, what did I do wrong? Did I do anything wrong? Or is it just part of the numbers, how it played out? Was it actually a signal? Oh, I saw there's a support and resistance over here, and I shouldn't have taken it. Oh man, you're down a rabbit hole of like not knowing. Anyways, that's where you come back to, I have my back testing. But you need to experience that live to see how you're going to operate in that. How are you going to manage the fear and the greed? How are you going to manage the feeling of making the profit? Are you going to go again? Are you going to take another one? What was your trade plan? Did you say you're going to take one trade? Or did you say you're going to take 3 trades? And if you said you're going to take one trade and you took 3 trades, let me tell you from 12 years of experience, you will fail in trading if you continue those habits. Trading has a blurry line of gambling in it. And if it's not done professionally, you're a poker player showing up with no plan, no statistics or edge to hold on to. You don't have formulas on what you're betting for each hand, and there's a formula to it, right? On how to do this game or this business long term and not get kicked out of the game. So to recap, point number 3, you need to trade live. And this is massive. Hold on to this point. You are going to save so much capital holding on to this right now. Trade the smallest amount that makes sense. Here's what I mean by that. Don't put $10 into an account and start trading. That is dumb. Here's my advice. In the Forex or futures world, I trade Forex, trade with a prop firm. Go find a prop firm. I use Funded Next. I'll try to put some links in the description. I've never done this yet. So Funded Next, they are a prop firm that says, hey, we will give you a challenge, a simulated $6,000, and it's going to cost you $60 US. So you get to trade on an account that shows $6,000 US, but it only costs you $60. To me, that makes way more sense than putting minimum you should put in a trading account, I'd say, as $1,000. If you're trading your own capital, like it's not going to make a difference if it's anything less. Like experiencing a win and loss that's $1 up or $1 down, I just don't think that really matters. So I think this is the way to do it. And if you blow it, and they have rules and parameters on how to blow, if you blow an account, you've lost $60. Okay, it's $60. There's going to be an investment in this game. They call it market tuition. People pay in Canada, say 50 grand to be a teacher. You're going to pay some market tuition in trading. There's going to be a lot of lost capital in figuring out this game, which is figuring out strategies. But my belief, 90%, if not more, is actually figuring out yourself. When I heard that 12 years ago, man, I didn't understand that. But I'm going to try to deep dive this into future videos. You have to figure out how you tick, how you operate. I'll go into that on more videos. But again, forward, test, trade, live. And you have to commit. This could almost be a fourth point. Commit to taking, if, say, example, we're doing one trade a day, which is a pro tip I'm suggesting, one trade a day, a minimum 1 month of trading. Take 20 trades and see what happens. Dude, if you have a 50% win rate, so you're literally loss or profit right down the middle, you'll just be at the same place at the end of the month, which, goodness, you'll be ahead of 90% of traders if you just don't blow up, if you just don't blow the account. So 50% win rate, 1-to-1, is a great starting point. If you're not losing money in the beginning, you're slaying it. You're ahead of the game. So super important. That's all I got for this video. I can talk for a long time on this topic. This is the part where everyone says, like, subscribe my channel. I actually truly want to know in the comments below, not to build the dumb algorithm. I want to know, what other topics would you like me to talk about? Maybe even specifically, what did I talk about today that you go, I need him to elaborate on this? You could be starting your trading journey right now. You could be 2 years in, 5 years in, 10 years in, and you still don't understand anything. So truly let me know what you'd like me to elaborate on and do a separate video on, and I will absolutely do that. All right, thanks for watching. Until next time.